What's up, everybody? This is Jimmy with Trading Decoded. It is December 19th, 2024. Finally, some confluence between the charts, what feels like the first time this month. The only thing that made today a little uneasy for some was the cost that which it was to trade. The expected range today was higher than one that I'd ever seen before at almost $7. Which is the market maker's expected range for the day. Thinkorswim tells you what that number is. And usually when that number is high, it's because volatility is high. And it was extremely high this morning. High volatility makes for high contract prices. In fact, that the SPX contracts we were looking at trading were between $2,000 and $2,200 a piece. Yeah, if you have a hard time swallowing that pill, today was difficult to trade for that purpose and that purpose only. But if you were able to get around that or trade SPY contracts instead or futures or whatever the case was, where that is not really affected by volatility, being the cost of your trades, the chart itself was beautiful today. We had an epic day in the community. Last I saw, we had 9 red books. That means 9 people registered a red day. In over 100 at the last count, I think it was 114 greens. That is outstanding. So congratulations to the folks in our community. We crushed it today, and we needed it. I needed it. I needed a normal day because I was starting to think that I was going to have to figure out a new way to trade to make money. But today was a good day. Hopefully tomorrow can bring us something similar because tomorrow will be my last day trading until January 2nd. So with that said, let's go ahead and launch the chart, talk about what we saw, what we did. There aren't very many trades that we're going to go over because there was not really much of a need to take many trades because a lot of people took the 3 that we're going to talk about and they made a lot of money. So today was a good day. That said, I felt like calls today. Yep, you heard that right. I know I'm usually looking for puts, and you wouldn't be wrong. I feel more comfortable playing puts. Doesn't make it right. It's not really a bias. I just feel more comfortable with it. Today, I felt pretty good. I would call it that I had a call bias today, which helped me tremendously feel comfortable in taking the trade that I started the day with. Why did I have a call bias? Well, in the pre-market at the time, everything was very green. We had started to trend up into the open, and we had a massive dump day yesterday. So I just didn't feel like the market was going to have a whole lot left in the tank to the downside. Willing to be wrong, but in the morning, I felt pretty good about calls. We did our call put scenario, right? Our call line was 591.43. Our put line was 590.59. We have similar lines that we put on the Qs now. So when I feel like I want to see both charts above or below certain levels before I feel comfortable taking those trades, I mark them on both charts. As you can see here, we had a call line on the Qs at 521.30, a put line at 520.41. Now, with that said, what I was hoping for the Qs to do if they got over this white line was head up to the next line. They almost got there, but it struggled to do so. SPY opened over our call line and stayed above it. I personally got into this trade during the printing of this candle while Qs was toying with the idea of breaching. In fact, it was breaching, falling below, breaching, falling below. I didn't wait for the candle close, even though you could have, we should have. Qs didn't do what I hoped that they would do, but ADD kept the drive alive. So this is one of those instances where only because the Qs didn't fall through the floor, they had a support level, they stayed on that support or above it, not pulling SPY down, but ADD aggressively pushing up allowed SPY to continue trekking up. And we first were aiming for the first line. Okay, now it's hard to tell, but that move from blue line to this orange line is decent. It's like a 60 or 60%. No, it's like an 80-cent move. That's big. That's a nice paying trade, and a good trade it was. But some of us stayed in that trade because we never came back down. Qs never broke their support. SPY never came back down anywhere near our entry point. And why did we get out here? I'll tell you why. And again, this was textbook. It was beautiful. Don't always work this way, but it is something worth looking at. While we were in that trade, I was talking to the entire community and said, guys, what do you notice about these ADD candles? And because we talk about this all the time, several of them say they're getting smaller. I said, well, what should that hint at or potentially spark in your way of thinking? That it should tell you that the momentum is slowing. I'm not at this point assuming we're going to rotate and crash, but these big green candles takes a lot of buying to make big candles like that. So if they start to slow down at this time, right here at 9:33, I'm telling people, guys, these candles are getting a little bit smaller. If it starts to print some red ones, this might be the end of this move that we're in. So as soon as this candle started to print red, we went ahead, we got out of the trade. That happened to be the high of day, and still is the high of day if I'm not mistaken. Whole number as well, right at 593. So you had a bunch of reasons to consider at least moving a stop up in place or taking profits up there. So this trade from entry to exit was about 31% for me. Several people got out here getting anywhere from 18 to 22% return on their money. And that was the first trade of the day. Beautiful trade, felt really good. And then we rotate down aggressively. SPY still didn't get below its put line. Qs did get below its put line. So we have people that trade Qs. As soon as we crossed that line, she got in. She played it. I say she because there's one person in particular that asks me every day about Qs levels so she could trade her NQs. She made a killing on this move. 1.5 minute trade from line down to line. Again, we're not in it, but the Qs did meet the criteria for us to be interested in puts. However, SPY did not. Okay, SPY put line is all the way down here. We start to put in lower highs on SPY. We start to put in lower highs on Q. Gives us a chance to consider drawing a downtrend line. Finally, SPY gets through its put line at 951. At this time, Qs are also below their put line. Qs were up against their put line. Testing, lower highs. I think ADD at this point, was already rotated down. Excellent put scenario right there. SPY, I don't know why we don't have an arrow there. It's because I didn't take this particular trade. But this is the put scenario. Both charts at the same time, finally below their put lines. And as you can see, it went down to the next line. Okay? We're getting close to 10 o'clock. We don't trade or get into trades near 10 o'clock. We shouldn't. Most times we don't. But maintaining a downtrend, ADD is moving down. 10 o'clock is passed. We're below the trend line on Qs. We're below the trend line on SPY. We enter our puts. This is my second trade of the day. We stay below the trend line. ADD is selling off. And then I was explaining while we're waiting for this trade to at least get down to this line, I said to everybody, guys, when you've got lines getting close together, there's more buyers in the area, might be a little bit more difficult to get through that level. When we get down there, I'm going to take myself out of this trade. I had an alert set on that line for that exact reason. Because when I hear the beep, that sparks the reason I'm going to get out of my trade. Okay? And as you can see, we got the beep down here at 10:07, which is exactly when we were considering getting out of the trade. Not only that, but SPY and Qs was hitting support at the same time. That's always a good time to consider at least tightening up a stop loss or putting one in place at all or taking profits. So that was the second trade of the day that we took, or at least I took. That one there ended up being a 41, almost a 41% win. Beautiful day today. Again, big drops. These are not 10, 20 cent moves this time. These are 50, 60, 70, $80 moves, and those pay nicely when volatility is up. All right. So even though I'm done for the day, I want to point something else out. I'm being asked because several people don't feel comfortable taking trades either because the contracts are too expensive or, they didn't know exactly when to get in or feel right about getting in or whatever the case was. That's okay. But naturally they ask me, Jimmy, when would you buy puts? Even though we just got out of where I told you guys I want to buy puts. But I say I wouldn't buy them on this pullback here. Now, of course, most people, understandably, would want to know, why would you buy this pullback, Jimmy, or this one, but not this one? Because things had changed. So at 10:10, we're moving up. We're coming up to the trend line. That's not the reason I wouldn't buy it. Q's at 10:10, we're coming up to their trend line. All things look like, hey, let's buy this pullback. If the trend continues, we should leg down. The difference was at 10:10, ADD was printing a green candle. The momentum to the downside had slowed and started to move in the opposite direction. When this started happening here, right here is when I said, not on the big green candle, before the big green candle, when we were no longer moving down, I said, guys, this is not a pullback I would buy. And that's why I explained. They asked why, and I said, because everything that we want to see being red is currently green. Qs are pushing up, ADD's pushing up, SPY's pushing up. There's momentum behind this. I would not buy puts here. Thankfully, most people didn't. I don't know if anybody did, actually. And if they didn't, good for you. You saved yourself a boatload of money or hurt. Okay? But if you look at this pullback at 10:01, at Q's at resistance, SPY at resistance, ADD printing red, everything was in our favor. That's literally an A+ setup. Okay, same thing when we got below both lines, both charts were below the put line. Everything at that time was printing red. Beautiful opportunities here, okay? A wedge. Now, normally, we don't play wedge plays unless there's good reason for it. So let's fast forward here. We're putting in higher lows, we're putting in lower highs. Telling everybody, don't get into a trade while you're in a wedge. The beauty of this wedge is if I tell people, we have these conversations every day. Guys, should we buy calls if we break this wedge to the upside? I don't answer it for them. They answer. And the majority said no. And then I ask, well, why not? And they say, because there's not enough room between breaking that line before you run into your next resistance. And that's right. You want to skip that. However, if there is room between breaking that wedge and the next support down, yeah, you can take that. Coupled with, what is ADD doing at 10:20? If ADD is trending up, I wouldn't aggressively take a wedge break that's going down. Okay? But if ADD is trending down or printing red at 10:20, right here, let's go for it. What are the Qs doing at this time? Oh, they're breaking support and they don't have another support until all the way down here. So in this trade, we were getting in because of the wedge break with room to move to the next support. And what I'm looking at is to the left when we failed to stop moving lower. It broke, ran down, did hit a level of support here that pulled back. No harm, no foul. It continued its move down, not only to where we wanted to go, but lower. But the whole time, ADD was still printing red. Okay? Again, I was not in this trade, but it was a beautiful setup. Bunch of people in that trade made a lot of money. Okay, so where did we get out, or where were we suggesting to get out? At this point, we put one here because at 10:25 on the Qs, both charts were struggling to move lower. Okay, both charts were struggling to move lower. We recognized it. For 3 straight minutes, we stayed on this line. Told everybody, guys, I'd like to believe it's going to continue down at least to the next line, but it's struggling to do so now. If you want to take your profits, take your profits. You're in profit comfortably. If you want to let it breathe, that's up to you. As long as we stay in a downtrend, as long as ADD keeps printing red, hopefully we get down to the next line. We did get down to the next line after a little bit of a pullback, but that is why that circle is there for exit, because I was suggesting to people, hey, you made good money. You got to drop from 590.20 all the way down to 589.14. That's more than $1 move. And it happened literally in 2.5 minutes. That's big money. Remember, guys, people spend a year investing, hoping to make 10% return on their investments. In day trading, we're hoping to make 10+% in our trades in minutes. This is sustainable as long as you don't abuse it, right? This is a conversation we got deep into today. I've got a lot of people in my community that are chasing a number, and they won't stop trading until they hit that number or run out of buying power or blow up their account. That is not the way to do this. You don't chase a number until you've learned consistency first. You have to be able to follow your rules, trade after trade, because if you chase a number without knowing how to be consistent, you're going to earn more losing trades. You will be going backwards. Not only will you be destroying your account balance, you'll be destroying your confidence. The money you can put back in, the confidence takes a long time to build or build back after you've destroyed it. Many people don't come back from that part of it. You have to respect that the market is the boss. And as long as you respect it, it can reward you infinitely. I was asked again today, Jimmy, do you think day trading is sustainable? And I believe the answer is yes. The problem and the reason that it isn't sustainable for people, usually, is that they get comfortable in their situation, right? I'm very comfortable with the way I trade and the money I make. But that comfort often leads to a lack of energize, meaning energy. You get bored. So naturally, it's just like adrenaline junkies, right? They want to push the boundary until they break their bones or pass away from an accident or something like that. Trading's the same way. If you get complacent, even though it's doing good for you, you start making changes to what was working. And oftentimes those changes undermine your ability to be consistent, and then we no longer can maintain a day trading strategy that continues to work. But as long as you don't change anything, or at least drastically, yes, you can do this every day. Just tailor your trading strategy to what you're comfortable with, set reasonable expectations for yourself, and walk away when you've made your money or money in general. I tell people, chase green first. Who cares about the dollar amount? Because most people, realistically speaking, that are learning to trade aren't green at the end of a given week. They're red. So I like to tell them, even if you made $5 a day and walked away, you're up $25 at the end of the week, which is way better than what you're used to. Don't sell yourself short and tell yourself that progress, because it's not a big enough number, is not good enough. That's how you have to build your confidence up. While you're building your confidence up with money that doesn't seem like enough to you, you're also building your account. Compounding small wins is the way to success as a day trader. It's the people who are constantly aiming for home runs that fall on their face. Take modest wins. Yes, In doing things the right way, you will end up getting some random home run plays. But don't aim for the home run every time you're up to bat. Get on base. Make smaller amounts of money regularly, and you will outpace and outdo the guy over there who's aiming for home runs every trade. I promise. More trades does not equal more wins. It's the opposite. Please, just try it. If you're struggling with consistency, and more often than not, you are green on your trading days, but turn them into red days, I assure you that if you were to walk away each time you're green, I don't care how much it is, your account will benefit far more than you think. And not only that, and more importantly, is your confidence will come back to you, because you cannot do this as a job or consistently without confidence. Because without confidence, every trade you take is going to be stacked with hesitation and fear. And those two things, or one of those two things in any trade, is going to destroy your ability to maximize your return on that trade or get you into the trade when you need to get in and out when you need to get out. This is not an easy business to learn. I've never said it is. I will never say it is. In fact, I tell our members, be prepared. You are embarking on the most difficult thing you will ever attempt to learn how to do in your life. And I believe that. But I also believe that if you accept that and you're willing to believe that you will come in with the right mindset, the right attitude, and be willing to work so that you can earn the right to be profitable in the stock market. Okay? So, with all that being said, we had a great day today. This was another trade that we saw. It was right after SPY and Qs were breaking out after coming off of higher lows. We were looking for nice quick moves to the upside. You got it. And then that was it for the day, because I went to lunch and everybody wanted to be done. So here we are, holding lines of support and resistance like it's nobody's business. And that's pretty much it. So we're going to wrap this up. I hope you guys found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's a link down below. And starting January 1st, 2nd, I'm going to be reducing the monthly price because I'm going to be spending half days on the microphone. I'll be on the mic from 9 to 12 o'clock every day. And as a result of me not being there from 12 to 4, I'm going to reduce the price for the monthly subscribers. So if you're interested in that, or you're waiting for it to become a little bit cheaper and you didn't want to fork out the money to be an annual member, which is the cheapest way to be a member in our community, well, that's coming January 1. All right. And that's pretty much it. So I hope you all had a fantastic day today. I hope tomorrow brings us equal amounts of moves with equal amount of returns and Confluence and all the things that made today feel so awesome. Until tomorrow, I love you guys. See you.